my charts. I'm going to do that. Awesome, Renee. Hey, Niels. Delph, how are you guys? Let's see. So I'm filling in for Rich. Rich, if you're out there and you want to jump back in, you can definitely just take back over and do your normal thing. So I'm not sure if you had something else going on. And I'm just running a little behind here. I'm up in the mountains. We came up yesterday afternoon. Got to watch a little bit of the meteor shower last night. So we were kind of up late, drinking whiskey. Not like too much or anything, but a little bit. So I'm trying to get I don't know if it's studio mode, no. Workshop. Doesn't seem to be working quite the same. Oh, here we go. I think I got it now. Okay. Chat. So I'm going to do all room chat and current pit chat. I think that's how I want it. Screen shares. Hey, good morning, Stuart. Okay, guys. So, guys and gals. So, I'll just start out again. Bozier Parsons here to help. Try to give some different perspective, some different types of educational ideas, and help in your trading and your ideas and your setups and your psychology, whatever you guys want to talk about. The one thing, to remember is you have to be here. You have to survive, right? You have to be here, and you have to be able to get through some of your mistakes and your difficult times in order to enjoy the good times, right? Like shout out to Ben Lichtenstein from the old days. I was looking at Danny's presentation that he's preparing for Germany and talking about the old days and the futures pits and the transition to screen trading and everything. And an old shout out to Ben Lichtenstein, who had his Traders Audio service where he called out the action in the big S&Ps. And what did he used to say? You have to be here. If you wants to be here for the good times, you have to be here all the time, ladies and gentlemen. Right? So what that gets to, the point of that is, excuse me, Jimmy Mayo was also talking about it. Remember those days when he was doing that kind of service for us. The S&Ps were trading, I can't remember exactly, but you know, around maybe 1500 or something in the S&Ps, right? So a 1% move, you'd get, you know, 15 or 20 points on a big day. Or, you know, maybe it was like, maybe I was remembering when the S&Ps were like 2000 or so, and you know, you'd get a 20-point day is kind of like that was your movement for the day, right? Um, well, look at what happened this week in our consolidation mode and our sideways move and the big, you know, the real contraction we had in our ranges and in our 5-day ATRs. And I mentioned, called out, like, what was it, Tuesday, we had a 35-point day, range day in the ES. You know, it was the narrowest range day in like the last 200. Okay. And then Wednesday, we followed it up with another one that was also really, really narrow, like 45, 50 points. I can't remember what it was. And that's relative, obviously, to the extreme volatility we've had this summer with the war and everything. But you know, then sure enough, so what am I doing? I'm getting chopped around. I know probably some of you also experience the same thing, but getting chopped around on those days, you know, trying to sort of take trades and force setups that weren't really there, you know. And I talked about it. The frustrating part sometimes is knowing what you need to do and then not, and even like sometimes I'll say it out loud. You guys have seen me, I'll say it out loud. And then I do the opposite, you know, or I do what I shouldn't do. So, so starting fresh every day, like Manny talks about, new day, fresh start. That's also, I think, an old nod back to the Ben Lichtenstein days, I think, or I don't know how to pronounce that, Steen or Stein, but I think he also used a phrase like that in his Trader's Audio. I think it was new day, fresh start, new day, fresh start. And the point is, yeah, reset yourself. Make sure you're focused on exactly what you're trying to do with your trading plan and exactly how you stay alive in this game, because the fight, the goal, the end goal and the fight is worth fighting for, right? We all believe that, or we wouldn't be here, right? And so, you know, let's put the energy into the strength of our belief in that, right? And do everything we possibly can to protect our accounts, to protect our emotions and psychology, and to execute just cleanly per our trading plan. Okay, so opening bell, ding ding. I wanna pull up my 15-minute chart here on the ES. I'll make it big like this. For those of you that are familiar, I like using the 5-day ATR as this gauge of you know, kind of where how much price movement we might expect for the day, right? And that's why I was getting at, like, Tuesday, Wednesday, there wasn't, you know, it was better to stand aside, maybe take a trade here and there, but over trading those kinds of markets, you're just going to get chopped up by the algos that are basically providing the spread and taking your stops, and you know, they're sort of just working you over, right? Whereas yesterday, as soon as we started in the morning, sort of pre-hour to the New York Open, things started to set up like really much smoother in terms of the candles and how they looked and the price action. And the ATR boxes, these yellow boxes, this one's already updated for today's price action in the ES, but it hasn't changed too much, or basically around 55 bucks. And the previous day was similar. And what I want to show you guys is like, I do this every day, and it's like, even right out of the gate, if you had adjusted your ATR box on the overnight low of the day, you could see where this thing might be going to. And then obviously the 7820 level was a big level where, but it hadn't really been tested. So the idea of potentially seeing that break through gave us another adjustment that we could have done on our ATR box, where, look at this, if you had placed this thing at the low of the RTH session, you know, just looking at the fact that we moved, you know, off these overnight lows, we had a nice buying thrust, and then a candle that closed strong and above the open yesterday. You adjust your ATR box, or you make that calculation off of the low, and look at how close that came on the ES to fulfilling that, even off the RTH, right? And all I'm trying to highlight there is that the machines use these typically they use them as, you know, ways to understand if things are a little too extended. And I'm sure that they also kind of know the positioning in the markets, right? So I'm not saying that I got short right up here on the high, blah, blah, and then caught this nice move, right? I actually wasn't trading much at all yesterday morning because I was getting ready for a meeting. And of course, I missed the good move up. I missed the good move down. And then when I finally got involved, it was like, you know, there was still good price action through here, but I missed these great moves because I just wasn't around. But the point I'm making with the ATR boxes is, if you find yourself in a runner, you know, think about where that extreme move, where the sellers might come in. And, you know, it ended up being a wonderful reversal trade that, you know, you really, whether you were taking the long early or taking the short, the setups were there and they were beautiful, especially relative to Tuesday and Wednesday's price action. So the way I do these, just as a reminder, is I start out by having them centered on the Globex session close, and then I can just adjust them throughout the day if I think, you know, the high, it's basically a, do I think the high or the low of the day has been put in, and then I adjust it, and I kind of have an idea of where we can go. So the opening price on the ES, 78.27 3/4. That's this orange line that I like to highlight. I always think that the RTH open is one of the most important levels of the day, and I use that a lot. On the NQ, let's see here. NQ, we opened 241 3/4. So So what I do is I just start out updating my RTH prices, kind of give the market a little time to see where it wants to sort of price discover, where are the buyers and sellers, where's that support and resistance going to come in. We know where it is on the charts, right? We know the levels. You can use my level sheets. You can use like Niels's platform where he's got all that stuff kind of built in, which is really nice. I like to try to keep my charts a little cleaner, so I like having my levels sheets to refer to. And then there's like Danny and Manny and all kinds of everyone else knows, right, that the previous high and low is obviously, those are big levels to watch. You know, the closing print, the overnight high and lows, you know, it's not like we need to search for where these levels are other than when you're expanding out through, right? Because even when we're making all-time highs, we don't know where those sellers are going to come in. You know, the support and resistance is created by the buyers and sellers after the fact. It's not like you can just magically, I mean, I think that's where some of the mathematical, the algo math, as I call it, can help, because if you're overextended in one way or the other, you don't want to press your positions too much because the risk reward isn't there, right? And that's, Danny's always talking about that, how you don't want to press your shorts when the ES is sold off 100 points. I mean, sure, you can have a day where it sells off 250. We can have a day, one of these days, where it sells off, you know, because we're trading almost 8,000, you know, think about that. If we have a 10% horrible market crash, the market could drop 800 points in a day, you know? And if you looked at his, I don't know if he shared it in the pit or not, but if you did get a chance to look at his draft slides of his presentation, excuse me, the one that shows the history of market crashes is really cool to look at, because it reminds you not only how big and crazy the corrections can be, but also how varied they can be in terms of timing, how long they can last, you know, and when they happen quickly and they're real crashes, you know, of course you can have these things extend way farther than what you think, but anyway, let's get back to kind of updating our prices here. Look at the YM yesterday with its ATR box. You see this? Once this thing put in its rejection candle, if you used that, you know, you can see exactly, you know, and again, it went a little farther through. These things work. Even if you said, oh, I want to ignore the wick up here, you know, it's a really cool concept that I really find has worked well for me over the years. So let's see. So YM opened 53,863, if I'm reading that right. Here's how I had it. So centered on the overnight. Sorry, the Globex close would have been right there. Here's the open on the Globex. So you can quickly and easily see if this is sort of our low that we're putting in right here, then YM goes right back up to these tops, you know, potentially. And it's just in a big range, but these selling moves that it's had seem to be pretty systematic, right? As you're looking across at it, and rotational. We had an early morning thrust out of the RTY, which was a little bit of the tell, or was a little bit of the tell yesterday. But then once NQ and ES really started to go, they started selling the YM, right? So that rotational function continues to be there in the markets. And, you know, it's not always that I trade a spread or a pair type of position, but sometimes when you do and you can get it right on both sides, you can sort of have your theory ready, and you can test it on one side and wait. And then especially if you have a profitable trade, and then you see the other side of the trade like start to work according to your theory, you can put on that extra amount of risk, sort of financing it with your positive, your winning trade, and you can get into a position on both sides where you're making money on both sides. Now, if it goes the other way and you're losing on both sides, the advice is always, and it's harder to do this than it is to say it, but do the hard trade first, which is take your loss first, get out of the loser first, and then worry about your winner, right? Because you want to manage the risk. All right, let's see what else we have here. Crude oil opened 81.14. It was another one. I mean, what a nice trade that Rev had yesterday. I don't know exactly where he got in, but if you're using the ATR box and you could see, you know, that this thing came off a little ways, it got in the overnight session, you know, look at how it perfectly fulfilled its 5-day ATR in the overnight session. It got down to the 50-day moving average and bounced perfectly. And what a nice, quick uptrend that ended up being, where it was just positioning, right? You know, all these people who were maybe too short got squeezed all the way back up to this 84, 85 level, you know, and then as it gets back down to a big level like the 50-day, you know, they're of course looking to get out of some of their position. I mean, it's always easy to say after the fact, right? But man, for Rev, that was an absolute beauty. And when you look at even how the bars set up, I think he pretty much bottom ticked it and top ticked the move higher. So congrats to him on a great day. But even if you missed the bottom tick, the look below and fail that a lot of you guys like to use still gave you a really great chance to get into this. You know, if you're buying, you know, anywhere this little penetration back into this candle or on this one, you're buying, you know, a lot of people just pay that sort of 50% retrace, right? So they say, well, a green candle should be followed up by a green candle. You're going off the 15-minute chart. Boom, you get a nice reversal here, sort of an inverse head and shoulders, another green candle. And then, you know, because if this one was too wide for you, this one presents pretty well, because if you're buying a 50% retrace, you can put your stop below that candle, you know. So that's sort of one way to trade these kinds of formations when they occur. You can obviously use your smaller or wider time frames for whatever confirmation and stuff you want. But so let's see. Here's our 4 o'clock. I just want to reposition this to where I normally have it. So here's the Globex session close. So again, you look at, for me on crude, I kind of try to analyze this quicker since it opens at 7 instead of 7:30. I'm in Colorado, so mountain time here, but so look at if this is the high of the day in crude, then it could come right back down to this 50-day moving average, which comes in at 79.84. Look at that. It's not, the math is there, right? And then all it is sort of in this range. We'll see what happens. Maybe that 50-day holds and we put in an early low and trap everyone that got short here, you know, and actually expand back out into this area. But see how that plays out. What's left? So we got that one. We got the YM. Here's the RTY. We'll get our opening price. Here is 30.57. So that's the orange line. There you go. If we're going to put in a continuation and close on the highs of the week, you know, let's say the low of the day is in for RTY. That's the way it's acting right here. It came down, barely swept through that level and stops, closed back up above its opening print, put in a higher low so far. I mean, obviously we still have 11 minutes on this candle for it to close, but the way it's been trading, these thrusts can be powerful, right? So if it trades into its 5-day ATR, it can print 30.82 on the day. And that doesn't mean it'll hold. It obviously rejected hard in the rotational trade yesterday. So you can see that again, right? You could also see profit taking going into the weekend, you know, and have this maybe be now a false move to the upside. And then if it were going to reject and go down lower, you know, it wouldn't be a huge problem, right? And just come back and test that low from Wednesday. I don't think, you know, I don't think you want to get overly bearish here on the way this price action goes. And I'm gonna reshare this other thing that I put out on Twitter and stuff. Let's see, maybe I don't have it on this computer. No, I don't. Unless I saved it. No, I guess I didn't save it in there. Well, if you have my Twitter account, you can see this chart I put out on August 5th. Oh, let me switch this to PP pit chat. Okay, Bossier Parsons. that come through? Oh, I did it in that one again. All right, hold on. At Bozier Parsons. But I showed this chart from August 5th for the NQ on the daily, and the illustrations show how really sort of, I mean, to me, it's not a coincidence. What I said was, is this a coincidence? Here, let me see if I can find it real quick. But the point again is these things aren't coincidence, right? Like the reason that patterns repeat themselves is because we're all in here every day and we make up the market, right? Just like whatever machines that are always doing the same thing every day, that's part of the deal, right? Is it's a repeated behavior pattern, and that's the point, is we're trying to make these guesses based on previous patterns that repeat. Let's see, save image as, and go trading. Let's just do that. Now let me see if I can post this for you. Okay. There's that. If I pull it up on here, it doesn't, might not be super clear, but because I got that off of the Twitter. But the point I was making in this illustration was that this is a big pattern that looks very much like it repeated to me, right? So my question is, are we going to have this big measured move and see a big, pile back in on the NQ? And what I noticed was this explosive gap up, and then the fill, and then the sideways and the lower low and the 2-bar reversal. Same exact thing. Then we got this monster rally in April and May. Same exact thing. I mean, just look at the gap up. Here's the gap up. Look at how the fill of the gap was, 1, 2, 3, maybe 4, 5 kind of thing. And then it goes sideways. And then you get another 1, 2, 3, 4, 5 kind of pattern, right? Right here. 1, 2, 3, 4, 5. It manifested a little differently, but then look, 1, 2, 3, 4, 5. These patterns repeat, and then the 2-bar reversal day, 2-bar reversal day with a monster thrust, right? So that's why I put this in here, measured move. Is this a coincidence? And yesterday morning I posted about, maybe this, now we've had our little 3 or 4 day consolidation, and now maybe it's ready to continue and start this big, same thing here. It had a pretty monster rejection there, right? This one looks even huge, more monster, right? But then it only, it's like a 2 or 3 day sort of one quick little pullback, and then a 2 or 3 day sort of congestion. And then when it went, similar thing. It went hard, sort of paused, and then boom, it goes again, right? So that's kind of what we got yesterday. And whether or not we have the oomph to really put in a measured move and go all the way back up to new all-time highs, and like if you're putting in a measured move, the projected high would be somewhere around 32,110, 113. Same thing in the ES, the projected high would be like around 8220. So you know, even though I like trading short, you want to be more careful, I think, on the short side, and respect the bull market trend, the super boom trend, if you will. So, okay, we're almost 30 minutes in. Take a quick glance across the board here. Advanced declines opened around 240, made just a little bit of a down attempt, and now are pushing higher near the highs, almost new highs, up at 550 on the day. Mag 7 looks relatively good. A little choppiness in some of the names, but some green in Apple, Google, Tesla, Microsoft, Meta. Nvidia rejected a little bit, but see if it can hold this 225 level. Amazon's been weak, so kind of reflecting maybe you know, the consumer and whether or not they have a lot of spending power with the inflation kind of stuff. That even though we had like decent numbers, they weren't great. They were just numbers that continued to thread the needle, right? So that the market interprets that, oh, we can just still be on pause from the Fed. Pause for a little coffee break there. So you guys have any questions so far? Anything you want to cover? We can get into trying to start to trade a little if you want. It still looks pretty choppy to me here on the, you know, these long tails, and you could have a, you know, we've had so much volatility and such good trading all summer long that I was also saying, or, you know, on Tuesday and stuff, that it wouldn't surprise me if we have a couple weeks here where it's, you know, where we're kind of more into it, more traditional summertime trade, and it gets slower and choppier, and people are needing to get their vacations in and get their kids back to school and all that stuff. That's what we're going to Maine on the 24th, so I'll be gone for like 10 days. And, I need it. We need a break sometimes from the markets. You got to take a break and actually give yourself a true break, right? And that's good to do. It can be good to do when you're not in the flow and not trading well. It can also be good to do after a big day or a big week or month. You know, reward yourself, take a break. Try not to sort of let the greed, you know, really, you know, cause you to feel like, oh, I can do this every single day and have these kinds of perfect executions and all that every single day, because that's not realistic, right? You oftentimes when you get into the flow, you'll feel like that, and then that can sometimes be the most dangerous point in your trading, is because you without you really saying it out loud or knowing that it's happening, your ego and your subconsciousness can take over and start making you feel like you can do no wrong. And those are the moments when you can get crushed, you know. So using the risk management parameters in Trader platform, Niels's platform, or in Rhythmic, our Trader Pro, or anything else you use, like if you have those settings, use them, because you know, it's like you want to have a setting that just helps you, you know, locks you out when you start getting yourself into trouble. Because if you don't realize it, that's what those settings are for, is to help you get out and lock you out when you don't realize that you've gone into a mode that can cause you real damage, right? David Dubay reminded me a few weeks back of a great book, but a great sort of section in Dr. Elder's book on, I think it's trading for a business, or trading as a business, or I'll have to double check. But excuse me, the section David reminded me of is this section in his book about taking AA, you know, Alcoholics Anonymous, and translating some of the verbiage or some of the, you know, sort of just some of the premise of it into your trading lifestyle. And it was a section where it had sort of like almost like a mantra that he had created based on sort of an AA type of verbiage, where it's, you know, you wake up in the morning, you look in the mirror, and you remind yourself that, you know, that you're a alcoholic, or, you know, whatever, a tradeaholic, and that you have the ability to do damage to your life, to your account, to your, you know, and that you have to take one day at a time, right? You know, it's such a common thing. I'm sure we all have people in our circles that are fighting through addiction, or have lived through, you know, really some of those difficult times. And it's just take one day at a time, and, you know, try not to let your head and your thoughts swirl around all the different things that that you can't control right now in this moment. You know, I really like the Power of Now by Eckhart Tolle, which was a book and an audio version as well, that my friend's mom gave me when I got divorced back in, well, I don't remember when I got divorced. It was like 20 years ago. But it was like, you know, a really helpful thing to me to have this different perspective of, yeah, like not creating the anxiety, you know, not creating my own fear and anxiety and sort of angst with the thoughts about things that I can't control. Like, if there's something I'm anxious about and I can control something about that right now in this moment, then I have a choice of whether or not I can do something in this moment. And that can be translated really well to your trading, because if you find yourself not following your rules, if you find yourself in a losing position that's, you should have taken your stop, and you canceled your stop, and now your loss is bigger than it should be. This is kind of from Mark Douglas as well. It's you have three simple choices. You can get in, you can get out, or you can stand aside, right? And so if you're finding yourself in a spot, you have to force yourself sometimes to make those decisions. Like, as soon as you decide to end the pain, like if you're in a painful trade, as soon as you get out and decide to end that, it's over. It's done. So instead of sitting there, hoping something will come back or whatever, try to do something about it. And so oftentimes what Dad would always say as well is, if nothing else, just cut your position in half. If you've done some stupid shit, just, if nothing else, you're at least mitigating some of that risk. If you still want to be stubborn, okay, but in the old days when we were trading like options expirations weeks, and they were basically monthly expiries, or however you say it. The unwinding days could be really amazing trend days. And guess what? If you faded them, you'd get run over, and it wouldn't give you much of a chance to get out, and so, yeah, I've had those moments where I did the wrong things and had to figure out, okay, what do I do with this here? And sometimes it's just finally taking your loss, and it can cost you way more than it should, right? But you do have choices in those moments, so don't. And everyone goes through them as traders. You're gonna be around for a long time, and you have these different market structures and volatility moments and all this kind of stuff. You're going to experience it. So don't feel like you're alone in any of that, and just continue to stay focused on, one trade at a time, one day at a time, living to fight another day, and if you do that, the profits, the good trades will take care of themselves. Because like yesterday, if you got long early and you got pre-market or even that first pullback, you didn't have to take much heat, if at all. It went your way. It ripped on through, and those are the ones that pay you for the month. If you get 2 or 3 or 4 or 5 of those a month, that's your living right there. So all right, let's see what's going on. We had a little bit of a high in the overnight in the bond markets. Everything's still kind of looking pretty choppy. There's a lot of gray on the big board, meaning things kind of flat. Oh, but look at this. Let's go back over here to the RTY, right? RTY sustaining its thrust here. So let's see if it can go straight up through and print that 3081 level. it's pretty good, you know, the market broadening effect. In regards to how AI is, you know, the super boom thoughts on AI and stuff like that. It could really be like that the RTY is showing its hand here, and that the better all this stuff gets, and then with competition and stuff, and as prices come down, you know, maybe it's just reflecting that the small caps and small businesses and stuff can really benefit from this stuff. And maybe their benefit will far outweigh the benefits of the big business and big corporate. We don't quite know how all that's going to shake out, right? But it could be that as things settle out, you know, you get a you know, a sort of a better ROI from the small caps and small businesses than you do big caps. I've traded it here and there, Stuart, RTY. I don't, the reason I typically don't is because RTY and YM have such lower volumes than ES and NQ and CL. So that's why I do my level sheets for those three. And that's why if I'm trading, usually I just trade ES, but if I'm building my account and I have a little more capital in my account, then sometimes I'll put on a pair idea like with CL against ES, or sometimes I'll take an NQ trade just because I'm really I've got some real good idea about how, you know, what I want to do with it. NQ is a harder one for me because, like, I like to use the DOM, the order book, or the depth of market, the ladder, you know, for my trading. And it moves so fast that the ladder, like, you can't even keep up with it, right? It's crazy. Okay. Marlon says it looks like Rich is in the middle of moving. So, so that's, I guess, why he's not in here this morning. That's okay. Wish him luck with all of that. I hate moving more than anything. Well, let's see what else is popping up. We've got pretty good green in the electronic technology sector. But then it's also offset by Broadcom being down 4% on the day. Cisco down 1.7%. KLAC same. ANET down 1% or so. But otherwise, MU, AMD, Texas, Intel, SNDK up 7.5%, STX up 6%. You know, so there still could be some room to run today, but we may have used up a lot of energy yesterday on both sides of the trade, and you, like I said, you could be just ready to kind of go into the weekend and we might not have a lot of action here. Hey Stuart, do you trade RTY much, or what do you like? What's your go-to? No, I tell you, trading thin instruments is an art form, right? I traded gold for a while. It was, God, it felt so thin. It was so difficult, I thought. So, I mean, that's sort of like big boy stuff right there. Like, the pit bull, Marty. It's impressive people that trade that kind of stuff and do well with it. You really have to kind of yeah, look for those wild extremes, and I think you really have to be more of a liquidity provider on those wider extremes. You have to be kind of willing, I think, to just sort of have some orders parked at, on both sides of the market in wide locations, almost like you're trading like a Fed day every day. And I kind of feel that way about RTY and YM. They're really pretty thin. Let's see if I can get some ideas here. We've got our advanced declines are holding up still. They're still pretty much near their highs. The way the rotations have worked, right? If you see YM go on out through its high and RTY follow through, we might just see a little more selling in the NQ and ES today. We got Nvidia still hovering at this 225 level. It's like might have eyes to go back down and test some lower levels there. The tech services space looks kind of red, right? Oracle, Palantir. What is this? CrowdStrike. CRM. PanW. What's that one? I don't know. And then some red in Lilly, down 2%. LRCX, I don't know what that is. AMAT, down 4.5%. So what I used to like about, I still like it about the three instruments that I do my sheets on. This is referring back to sort of the older days as well, when prices in general were a lot lower. And I would use the 5-day ATRs to get an idea for just overall how many ticks per day are you potentially going to get out of these instruments, and that's what I would do. Now back then, oil crude was trading a much higher average daily volume, was closer to like 700,000 contracts a day pre-pandemic and stuff. And so what would happen is when, like right now on my ES sheet, the 5-day ATR has contracted and is lower than 40% of its 200 day average 200 day of its 5-day ATR. It a little convoluted sort of calculation there, but what I'm getting at is when it really contracts a lot, I have a filter on it that says I really shouldn't be trading it, because now all of a sudden it's gone into such a contracted mode that it tends to just be a choppier kind of trade. And so over the years, that's partly why I was using NQ and CL, was to find other opportunities in other markets where, sometimes you'd get, oh, I only have the potential to make, say, an ES 20 points in a day. Back then, I only had the potential to make 80 ticks, right? But it's like, it's hard to catch all 80 ticks of of an 80 tick day, right? So like I would look at, say, crude oil, and if crude oil was trading a little higher volatility, like in a $2 range or something like that, then I would look at that and say, yeah, can you catch 80 ticks out of 200? That's easier to do, right? Because you don't have to worry as much about trying to catch the very top or bottom, right? You can let the thing show its hand a little bit before you come in. And so similarly, I would say that in the opposite world as well, like you start seeing, for me, for a long time, it was like, man, when the ES starts trading in 100-point day, like, I don't really need to be involved in that, right? But now that's gotten to be the norm because our prices are so much higher than they were. So at some point you also sort of have to embrace the volatility, because that's when you can really do well on your good trades. But balancing that factor, or those factors, trying to manage your risk at the same time, is what becomes sort of the modern day challenge of positioning and risk management. And that's why I've been working a lot on trying to add to my winners and taking like a one lot with a smaller risk and just having stops that add to my position if it goes my direction. And ideally what I'm doing there is trying to just join into a liquidity sweep early on in the liquidity sweep, and hope that the liquidity sweep is not a quick 1-minute event, but rather the start of a new trend. It's hard to do, I mean, because the speed is tricky, and then kind of where you put your adders is tricky, because I've had these moments where I add, and then that's right where it sort of goes back to the original entry point. And then, you get caught up in like, oh, did I just add at the wrong time? And now it's reversing, and do I reverse, and all those sort of things. So the concept is that I'm trying to build on is to take a small risk, add very, very quickly, and keep the risk sort of the same, with the expectation that the order flow and the trade should instantly go your way and never look back. And like I was saying this morning earlier, like if you capture 3 or 4 or 5 of those a month, that pays you for your, it's a living. And if the rest of the time you're taking small stops, it's fine, as long as you sort of keep those small stops to, like, however you figure out your risk reward factor. But if you do, say two or three stops a day, and then you've lost a few $100 or $500 or whatever your level is, then lock it out and be done for the day. Because if on those days where you have the adders and they just quickly go your way and you make 2 or 3 or 4 grand or 10 grand, it easily pays for a couple $500 losing days, right? So those are the numbers you want to be constantly reminding yourself in your head and tracking on your journal and everything, right? You definitely want to track this stuff because you want to be able to identify if you're taking different types of setups. You want to be able to identify later, what really has worked the best for you. So continuing to get a little downside pressure here, kind of taking out some of these levels in the overnight, at least in the ES. NQ still testing. Bonds a little bit sell side. Kind of a reversal on Apple here. Apple's testing its pre-market, I guess. It's 4 a.m. or, early morning low. Nvidia did break down there, got to 224.5, but now is bouncing back up. Let's see if it can reclaim the 225 level. Broadcom's now down 5%, over 5%. So I'm going to pull that one up on a single symbol chart. Just take a look at that. The VIX 14.5 or so. It's pretty incredible. Broadcom. So Broadcom is closing its gap almost, or making an effort to. Let's see, the high was 392.61, so it's still got a few bucks to go. So big gap down this morning, and now it's trended lower, and it looks like it wants to try to come back down and close that gap, which would be probably a good test. Sort of could be a scary looking chart if it doesn't kind of hold the top of this range. So we're now an hour in. We're below our opening price on the ES and NQ. YM and RTY are both above. Oil is above. Kevin said here. Advanced declines could not make a new high up there, and now sagging back to 400 or so. $30 years testing its low. See what that looks like a little more. $30-year is now at a level that sort of reverses this sort of bigger move from yesterday. It still has prior day's overnight low. We may just need to get back to, retest the big figure and maybe shake out some stops below the 7,800 level. Yeah, the pivot held well a couple days ago when we were in that chop zone, right? So that could be a good spot to try it, or to just wait and see how it reacts there. On the NQ, I have the pivot at 30,089 on my sheets. And sometimes that's the thing in the NQ that can hold really well or sell off really well from. So it's only 40 points away, right? So that's a pretty good spot to probably watch here. Now you've got another break of Amazon, Google testing lows. See if it breaks. Let's see here. There's a break in the bond markets. All three of them making new lows, 2s, 10s, 30s. So I'm going to try offering one here at yeah. I think I'll try one offering here around 15 3/4 if I can get it. RTY making a new high. Okay, I'm short 15 3/4. I'm going to try to add to this at 13 3/4 and 11 3/4. I'm just using a tight stop. Basically, my stop is right above this candle right here. It's probably going to get stopped, but the alternate to this equation is if it runs the stops below the pivot point that Philly D was highlighting. And as if I get my adders put on, then the stops just sort of start trailing, like kind of break even for small. So I added one, and then where I would sort of start looking at trying to take it off is like, say, 8 3/4. I'll bid on one. It could be the perfect spot to be buying, and this could be a reversal right here, right? So I don't mind having a really tight stop. I mean, 17 3/4. And if it stops me there, that could be a great reversal trade where it goes right back up to the opening print and through to new highs. But we'll see. Now we've got YM back down below its lows, or its open, rather, I should say. But then you flip it around, you've got NVIDIA now reclaiming its range. So let's see what happens there. So I want one, if I can get one at 8 3/4, and then man, I feel like I should be sort of getting a reversal trade. But let's see if they reject and sweep this low here. So this is kind of the way you theorize it, right? On the big chart is if the high of the day is in, I can take this box, move it down here like this, and if we come back down to these levels, it's not really that big a deal, right? But there's plenty of stops on both sides of this market that they can just run them. But when I'm adding, like I said, I want to be trying to add in a spot that I'm joining in on the liquidity sweep and then quickly trying to take advantage of it at the same time. So that's what's tricky, because on one hand, I'm part of the, I'm part of the trap, right? And on the other hand, that can work out. When it works out, it works out. But anyway, to not expect some trade around some of the big figures, I mean, because it's easy for there to be stops below this level down here, and even below these levels, And so if they try to sell them in order to buy them, that's, you know, just sort of a shakeout of the most recent buying spree is potential. So let's see what the other charts look like here. And it's NQ still holding right here, right? So kind of think this is, like I say, I don't know why sometimes I'm trying to short when we were in such a bull market, right? But we do have oil rallying a little bit through its open again. So it's like sometimes the market can suddenly notice some of these things and they so I think now you want to see this become a lower high here and have it reject and come down through. And then if I can get my adder on and it can break the lows, then I should get a quick little profitable trade out of it. Meta is testing its low in the RTH, or, well, actually, I guess it's through that and now probing lower the overnights. NVIDIA is rallying now so that just the rotation can continue. I mean, we're trading so much off the bond markets right now, I think, that if you're not watching those, I think it's important that you do. Philly D, you've been trading well lately, buddy? All right, so what do we do to work in progress? I know. What do we do to change it, right? Have you been over trading? Stubborn with your stops? I feel you. It's sort of like a boredom kind of scenario, right? Like, why don't I just wait for the setups? Sometimes I get a little too sort of like wanting to be like my dad or something, like a little too like wanting to be a, you know, oh, let's test the waters here kind of thing, right? Instead of, hey, this was my setup, take the trade and let it play out. What's up, puppers? Now we're getting crude coming back to this 81.5 level. So if you like being long crude, this could be a pretty good reversal trade off the 15-minute chart, where you sort of buy some in here with your stop down below the open. I've kind of not been liking the price action in Amazon lately, so I'm going to look at that on a single. Yeah, I mean, these last, we got this great gap up, and then it's sort of made a sort of, it's backing and filling quite a bit, but on a interesting sort of downtrend, it seems like. Whether it continues and probes, you know, it's probably likely to probe into the huge gap that it had. That must have been earnings or whatever. So I don't know, kind of, I think this can go both ways here. But like I said, doesn't feel like, oh, you know, we may have just used so much energy yesterday. We could be right back into sort of Tuesday, Wednesday type of chop and not much to do. And we're getting some rejection out of the RTY now. So if the rotation is going to happen, then we could hold this level here in the NQ. Watching YM pretty closely too to see if it can take out the low of this 15-minute candle. So far, that crude entry would have worked nicely, right? If it can expand to the upside, could be a little bit of a repeat of yesterday's squeeze in crude going into the weekend. I don't know. That may have been my chance to get out. Now if they drop them the other way, so YM is probing down below the low of that candle there. See if we can get some down tick expansion. We would need to sort of make a new low in the down ticks. I don't know that that's going to happen. I have one more adder still at 11 3/4. Oh, wait a minute. Yeah. I've got my stop on 2 now at 14.5. Just that's break even plus a tick on the 2 lot. And I did not get another adder on yet, so it still needs to. It's tricky now because it's like if it stops me out at 14.5, I don't really want to add down below, but that still might be the right trade. But I want to add right now and have it sweep and just then have my stop above these little levels right here at 14.5 seems correct. But this could easily hold right here as a reversal signal and go higher, but it seems like the algos have a pretty easy way with selling through these levels in order to buy them again lower, you know, like sell them to buy them. But I could be feeling it here. So I did add one more. So I've got my 3 lot on. I have one bid at 8 3/4 and one at 5 3/4. And my stop is 14 1/4. And that could actually be a good stop and reverse kind of trade, but I don't tend to like to do that. We've got 2 minutes left on this 15-minute candle, so sometimes what you get is the selling coming in ahead of the close of that candle to print and take the downside stops, and then they can reverse it as well. So, or they can expand it, you know. Okay, they're either going to give us a sort of perfect double bottom test here, or they're going to try to sweep through to some stops. I took one off right there at 11 1/2. Stopped down to 12 1/2. It missed me on my first bid by 2 ticks. Held that pivot perfectly, right, Philly D, so far. So I'm just gonna keep my bid at 5 3/4 on one. I've got a small profit locked at 12 1/2 if it trades back up. Don't really, if you're short, you know, you don't really want it to come back into this range. If you're looking for the long, you want to see it come back into this range, and then now it should sweep to the upside. So I got stopped out. I made a little money by canceling my bids. This could be where they sell them again and resume. You know, sometimes I'm early on these and then I'm getting out on the reaction where I should be getting in. But YM, RTY held nicely. Advanced declines are holding. We didn't really get a lot of selling there in NVIDIA. I mean, it came back a little bit, but now it's trying to hold some. We got a nice sort of pullback in the crude market. That was interesting because I had my pivot on my ES sheet at 09.25. And so that's why I was looking to see if we could break that even for a couple ticks, like, but the reality is if I put my first bid at 9.75, say, then I would have gotten a fill there on that instead of, I mean, it was fine. There was a decent trade either way, small profit, but I'll take it. Build some of those. You want to be a little careful now because NQ rejected that test. NQ might still want to go down to its pivot. What did I say? 89.25, and then, you know, if it does get there, they actually could sell that level. They could sell it pretty hard. I think for me, the ideal long here would be if we put in a 15-minute doji candle, you know, nothing wrong with a little downside probe, but then if we recover, put in a 15-minute doji candle and then be buying the high of that doji as a reversal trade to come back up into the range and then go for new highs. Let's see here. Seeing another new low here in the 30-year. Another test of that pivot. That was the little stop run I thought I might get first time, and you know, or sometimes you can just get a little couple ticks through it, and now if it can hold and reclaim, and it could reverse it. I don't like the way they're selling bonds here. Pretty strong move. Now I've got the trader platform up here. Okay, now what I want to actually see is, in a similar fashion, if they reject this, they could reject it pretty hard. So I'm going to try one. Tight stop. $14.25 is still that level I don't want it to go above. or I do if I want it to reverse, right? So I'm going to try one at 10 on it. See if they do a little false breakout to the upside above the pivot. Okay, I got one on there. I'm going to try to add to this below. I mean, my idea here is if they sell the pivot hard, right? I don't want it then going back above the pivot. Okay, so I added a few. Sort of dangerous, but we'll see if I can get and be a part of a quick liquidity sweep. I might just try to take one off quickly. Okay, I got one off. Sort of have a risk-free trade here. Looks like NQ is going to reverse, but sometimes they then sweep it hard. Crude is coming off a little bit. NQ did test the pivot. So you want to watch if NQ can hold it or if it breaks. I feel like it's going to hold it. But I just don't like the way there's this pressure in bonds. I mean, these again are pretty big moves. Mm. Looks like it's going to hold. What do you guys think? Sometimes amazing how precise, right? The NQ pivot was 89.25 and we traded to 88. Like I say, they can sell them. Sometimes they sell them through the pivot pretty hard. So we do want to be careful here. I'm technically still on a short signal, short setup. So I'm below the open, downsloping moving average, downsloping moving average. What I need to see for it to reverse is a nice buying thrust through this. Then I want to have that shorter moving average turn and start sloping to the upside. And then I want to buy the first pullback, right? So right here, it's still intact if I want to be short. I mean, I can try it and just have a tight stop right above this 10.5 level, right? 8 3/4 with a 2-point stop. And then still be bidding on this stuff as a +3 and a +6 if it breaks. Okay, now I can kind of forget about this trade because I missed it. I had it and got sort of a little bit shaken out because I put my stop at a spot that was sort of like a free opportunity. I was looking to go, you know, to have it go into the liquidity like right away, right? And then when it didn't, I don't mind so much that I got out where I did, but you see how my pivot level was 9.25, and you see how it traded. This is sort of a classic example of what it can do, right? It traded 9.5, one tick above it, and sort of just became like a trapping point right there for, you know, for me and my stop and anyone who is, you know, trying to get long there. I'm sorry if you're long still, or if you tried that one and it didn't work. That's okay. That's how it goes, right? It just, we have to just take these, like the 15 level Philly D was not bad at all, in my opinion, right? Because you got some structure there where the buyers came back in, and they could have easily run stops right back up through to the open. But that's why you have to, you know, we're just paying attention to whether those buyers or sellers step in at the times that you sort of want them to, right? Like, I think there's something to be said for, I never did this really, but Dad used to talk about how you can also use just a time stop on your trades. Like, and actually with the way some of the order tickets go now, like on some platforms, like on Rhythmic's platform, you can have your exits, you can get out of trades on a time release, you know. I've never really, the only time I've really done that is I have a setting where I can like tell it to just, if I'm still in a position, I can just tell it when to liquidate, like at what time of day. So if I want to do like a walk away trade, or I'm not watching this thing the rest of the day because I'd rather go climbing, then you can try and get into one and walk away and know that if you're still in it and it's profitable at the end of the day, it'll just close you out. So let's pop back over to my trading view charts and look at how these ATR boxes line up. And you can see that if this ATR fulfills, you know, there's still juice in this trade to the downside if they follow through with it, right? So it could easily trade back down to this 77 level. Also, we've put in half of that, right? So it's like, if you have a day that doesn't follow through a whole lot either, you know, we could kind of hold this level, not run these stops right here, and go reverse back up and close on the highs and put in an ATR day that way, right? Like, so there's this kind of potential too, where, you know, where this now becomes the big level in here. Look at look at it on the NQ. So I haven't adjusted this at all. It's still centered on the close of the Globex session. And this is what I was talking about with the algos. It was pretty easy for them to know that there was going to be some stop orders in here. And the question is, were they selling them to buy them again on a retest of this high from Wednesday, which at the 30,000 level, that's, you know, that's a level of support, right, that should hold. And we just need to see, will the buyers start stepping in? And they could start stepping in a little early. Like if there's support, true support, then oftentimes they'll start buying it a little ahead of this level as well. You know, anyone who's short, who wasn't thinking that this thing was really going to go through yesterday, you know, if they're still short, they're hoping to be made whole again, right? So there's likely some support that comes in this area, but if it doesn't, it doesn't. So I always kind of like to think about is the support only is support if the buyers show up. Look at these last 4 days in YM. I mean, again, this is behavioral patterns, right? You get the thrust, the sell, thrust, the sell, thrust, the sell, thrust, the sell. It's like a distribution type of pattern, you know? So if you think the overnight high, I mean, sometimes when you make an overnight high like this, those are more of the positions that are trapped, you know? Talked about this in my, or maybe on Tuesday. If this is a big head and shoulder pattern, normally what I like is for the right shoulder to be lower, you know, so I would have rather had this be like this. And so when it started looking constructive again from this range, especially right here, that started to look pretty good to me again. But then if it starts going the other way, that's when you have to have your red alert on, because it's like, you know, I'm not the only one that's noticing that. And so it's like, if you start seeing the sell side pressure, it's like, oh boy, then you could have a lot of late buyers up in here that are trapped. This is good now. So if we can get, you know, we either should be selling them again here because we still could have another 30 or so handles to the downside to fulfill our 5-day ATR, or in a contracting ATR environment, you've now put in a 15-minute candle with a nice long wick to it. And if we can get some buy side pressure again, you know, the stops have now mounted seriously above that pivot level and above the 11s and 15s and 18s, right? But until, you know, for me, this is the part about waiting it out. I mean, either I should have taken that short signal again, which already would have worked and yielded you a few points of profit, or instead of trying to pick a bottom like this, you know, for me in my system, the ideal is that you see the thrust back up so that this 1 minute moving average can start turning and rolling back up to the upside. Broadcom is now down 6%, and it may have just filled that gap I was talking about. So let's take that chart. Yeah, I mean, it made a low there of 392.80. The high of the bar on Monday, August 3rd, is the gap I'm referring to. That high was 392.61. So it's pretty much right there, yeah. I mean, I'd consider that close enough. Like I say, sometimes they take it right to the edge, and then they can kind of start coming in just ahead of it, right? So if you start to see a little bit of buying and stabilization in the bonds, that will help here, I think. We could not make a new low or even break this 260 level on the advanced declines. So let's see if the advanced declines now can turn back to the upside. I kind of feel like I don't want to move the ATR box on the NQ yet. I shared my idea with you on the pattern in the NQ, and I think the spread can still happen where NQ starts to actually catch up and they could start piling in again here at any moment, you know. I mean, something like Broadcom, like I'm saying, you know, it could be forming a gigantic head and shoulders top, but this also could be a really good buying opportunity where it had the breakout, it's now filled the gap here, and they could really start piling into Broadcom again. And you know, I don't know fundamentals about this stuff or anything, but there's so much optimism, and rightfully so, probably, in all this stuff. It's sort of just a timing issue of like, how long will it take for the ROIs on these things? And I think there's still a lot of reload that could be happening in the NQ out of the cash raises that they've had in these, you know, off of this huge pullback that it's had. And so this is good right here. We're seeing some buying coming in. We need to come up through this and show the shorts that, uh-oh, it's time to get out of this trade, right? And then I want to be looking to buy this. I want to see all the rest of my kind of ideas come together similarly. Like, you know, it's one thing to just buy it, but it's another thing to just be a little more patient, like we've talked about, and maybe have a higher probability trade. And if you've missed, you know, if it's ends up being that short trade where we should have just been selling every one of these rallies, and you never wrapped your head around that, and you missed a nice move, so be it. there's another new low in the 30-year, and you know, it might have been enough of a little buying spurt that we had in bond markets to where now they start selling them hard again. But remember, the argument to buying NQ against that is that if you're trying to fight inflation, you need to own assets. So, you know, this thing, like I'm saying, with NQ could just be getting started again. And so you end up with that. It's a sort of the old school inverse relationship between bonds and equities, you know, sell bonds and buy equities, vice versa. So I like the way this is sort of shaping up here. I'm still a little timid because I don't like the rejection that NVIDIA had. But I think I'm going to give it a try on a small size at 4 1/4 here. I guess I have my sounds turned off. Let's see. Those are on. Maybe I have the tab. No. All right. Well, I'm trying one long here, 4 1/4. I want to add to this if it goes. And I want to see him run the stops back up through the pivot. Looks like, speaking of stops, I didn't toggle my bracket, so I don't have a stop in, which isn't great. Oh yeah, thank you, sir. If I start small, you know, with a 1 lot, I don't mind sort of giving it a little room and seeing what happens. But the way the way the programs work, they like to sell lows in a downtrend and they like to buy highs in an uptrend, you know? And so when you're in something and it just really feels like they're not going to let you out, that could be indicative, you know, that you're really in the midst of a sell program instead of in the midst of a buy program. I mean, obviously now you got some red bars coming in a row. What I like here is you're seeing a little bit of buying coming in at the same time in the NQ as ES is trying to print a little lower. But I kind of have a feeling, like I said, with the inverse relationship, we're now getting a little dip here on the crude side. I have a feeling the bulls aren't going to sort of give up on this that easily. But again, NVIDIA is now starting to sag quite a bit. So can NVIDIA break that 24.5 level or not? does it matter if it does, right? We've worked awfully hard to reclaim the 30,000 level in the NQ. I don't think it's just going to give it up that easily. Personally, that's just a theory, an opinion, right? It doesn't mean anything if it doesn't work. But see, now we're getting a little bit of buying coming in, so let's see if they can target these upside stops now. Could just be another sell the rally rejection point. Let's flip over to YM and RTY. Remember, we're still talking about these rotations, right? So if YM and RTY continue to stay red, we could actually see that rotation come back in here. And that's what I want to see, obviously, since I took a stab at it. "20 seconds until the close of this candle. It opened at 05. So if this candle can close at 05 or so and look like somewhat of a 15-minute doji candle, then the algos, in my opinion, are going to target the high of this candle. So that's the high is 07. I think they're going to run those stops and have a little reversal trade here, but I could be wrong. So don't stake your account on just what I'm saying. You can have your theory and then wait for it to present. So if they run these stops, then the most high probability trade is the first pullback after the reversal, which essentially in my brain is the reversal. You want to see it come up through here. You want to see the 1 minute start to roll back to the upside, which all that does is it signals to the shorts, oh, I held too long, I better start covering. And either they start covering and they're part of the reason that you get the thrust, or when it gives them that next pullback to get out of, that's the one that's the very best risk reward. So especially right here, if this pulls back and gives you a matching low at the low of this candle, which is 01, it's a little miniature inverse head and shoulders, and it gives you the very best risk reward trade you could have, because you can put on some size and have a really tight stop. And oftentimes it's like, oh yeah, they're just gonna stop me out if I try to take that trade. But if they don't, they don't, right? So it's a beautiful setup, really. So I mean, if I can get it again down here, I'd maybe try adding to it here. I don't mind adding to it above here if we start getting this buying thrust that I'm looking for. Nice live action. I like it. So now anyone who is short, this is the way the fuel works here. Anyone who's short should be putting their stops in above this high at 5 at like 06. You have the previous 15-minute candle high at 07. And anyone who is short from above starts to think, well, we want to just lock this in case it reverses. So above 06 is really a good entry, I think. That's why I'm going to leave this in to see if they'll run them to the upside. We're seeing a little bit of maybe stabilization in the bonds, but we'll see. And you know, I'm going to try one more right here. So I added one more at 1 1/4 so that my average is 2 3/4. Now I'm looking to add more if it goes my way here. And where do I want to sell into it? Well, above the 7s, there should be stops, right? So yep, it's a big obvious level, isn't it? And sometimes the obvious trades work because they're obvious, and sometimes they don't work because they're obvious. But in honest, like in all honesty, in a way, the obvious trades are the ones you want to be involved in. They're sometimes the scariest trades, but again, I'm kind of going back into Danny's presentation that he's preparing a little bit here. Is in today's world, we want to be participating at the big levels, at the obvious levels where the big volume and the big computer firms are also participating, right? And then it just is going to go one way or the other. It's still a matter of supply demand, and who's more anxious? Are the buyers more anxious or the sellers more anxious? And all that has to do with is the positioning. So we never really know any of that stuff until after the fact. And that's why, you know, oftentimes Dad used to say, well, when it really feels bad and really feels scary, you probably want to buy them, or at least be, you know, covering some of your short if you're short, you know, and vice versa. When it really feels obnoxious to the upside, you know, what they used to say in the pits was, um, when the ducks are quacking, feed them. And the concept of that was, you know, when things are going parabolic to the upside, you want to be selling into that, and you want to be pairing your position or fading it. And some of the other YouTube traders like FSP and Rips and some of these other guys, I think, are also like quite good at just FSP. His whole thing is, you know, he's just looking for those quick hard moves in either direction to buy, to fade, buy the dips, sell the rips. And it's like, it's an easy thing to say, it's harder to do in execution. But this could be a false breakout and a stupid thing to be buying and adding to it here. See what the other charts look like. YM tested its low there. RTY, look, tested that nice support level and has now gone bid again. So let's see if it starts ripping. And we want to see the advanced declines hold this 260 level. You should see the NQ retest its pivot at 89 and a quarter. And so what you want to really watch for on that is if they reject that again. I mean, this might be better for me to just trade trade a 2-lot. Let's see if I can get out at 12 1/4. They sometimes, so here we go with the NQ. Let's see if it can trade 89 1/4, and if it can break through, then sometimes what they'll wait to do is sell at a retest of the 15-minute moving average up there. If we have another 2 or 3 green bars, that's what you want to see, is the buyers start coming in with this kind of smooth, expansive buying control, and then find a spot like your 02 spot is pretty obvious for where your stop could be right now. It could come down and take those stops and then make the move, right? So I know how that goes because I do that stuff a lot too. So for me, it might be better, instead of trying to just hold, see if I can get one back here at, say, 6 3/4, and then look for if the runner can go back up through those 17, 18 levels. My target, if my goal is to make $1,000, that's why I currently have the 2-lot right there. If it's a false breakout, you know, now this is resistance. So sometimes the resistance, similar to the support levels, sometimes they can't get all the way to it. But you have to know that usually there's the resistance levels, and then they put their stops above so they can rip right through that. And just knowing that they have now the upside buy stops to kind of target and rip through. Okay, so we're getting close. Is it gonna downtick, or is it just gonna face rip? We got through the 07 level on the 15-minute chart. We got through, you know, the highs there on the NQ. Let's see if we can just get a nice thrust. Sometimes the thrusts that you get are also like 5 points wide, right? Because it's just an easy thing for people and machines to think of, like, oh, I'll use a 5-point stop. So the 07 level up to 012, and then you could get a reaction that you can start buying those dips again if this develops into, you know, your uptrend, where it sort of targets the opening price, targets new highs of the day. I mean, look, this isn't a whole lot of selling on the NVIDIA side, right? Like, having a sustained price back above 225 is impressive. That's what I'm talking about for the NQ in general as well. They don't really want to give up the 30,000 level that easily. Doesn't mean it won't trade back down through it. But, you know, it traded below the 50-day for a while the other markets couldn't. You know, then it recaptured the 50-day, then it bounced around the 50-day, then it finally responded positively and bought it pretty hard. And you know, if we do go back to that 50-day and NQ, I would think that they would actually keep supporting that level and buying it pretty hard. But that's, you know, still down at 29,557. It's upsloping now. So the tomorrow, like Monday's projected, would be 29,574. So that's why I say NQ could still pull back a lot. But in my mind, when I'm reviewing that chart from the behaviors previously, that to me was what, you know, when the cash has to go to work, it can go to work very violently. And that's kind of what we saw in April and May. It's kind of what we saw a couple weeks ago. So like 5 points here. I mean, maybe I take one off. Let's see if I can get one at 8 3/4. That's right below the pivot, right? So this was, we got to within 5 points of the pivot on the NQ before this little rejection. So now we're faced with, it either goes on through or it comes back in to the downside. You know, the way the algos and the machines work, it's again pretty easy for them to run them back up to the upside as far as where that liquidity is that they know they can take advantage of. But if it doesn't, I don't need to be silly about this either, right? Because I can take a profit on a one lot right here and give myself a risk-free trade as well. So sometimes I'll kind of look at something like this and I'll just say, yeah, I don't want it coming back down into this range, so maybe it's worth just taking one off. But anyone who's short now, if they just shorted this level in here, they quickly put their buy stops in right above the 08s. And that's why I want to see if you get just a tiny little pullback and then it thrusts through. They should fill my 8 3/4, you know, within a minute or something, right? It should be very quick if they're gonna do that. So sometimes I'll wait and see, can we get it to start to uptick again just a little bit. And sometimes I'll just throw my stop in right below just in case it doesn't. Okay, so now if you're worried about it not making a new high right here, you can kind of follow along with your mouse, see what I'm doing. I'm like, oh, do I want to sell it? Do I want to sell it? Do I want to sell it? And I can either left click below the ask or in the ask column, I can either left click, which is basically selling a limit order below the bid. So it's like a market order, except I'm using a limit order below the market. So there's no slippage. It's just whatever the best bid is, I would get my fill. Or I can right click and have a stop going. And I can also right click up here and add. Still a lot of selling pressure in bonds. So does my theory hold up, or at some point do these markets worry about those higher interest rates? Every time that the economic data sort of threads the needle here, I feel like the markets breathe a sigh of relief and they just can go back to normal. And as long as we don't get some war thing, but now the structure could be that this is the pullback we want to be selling again if you think it's short side kind of day. Getting some pretty strong buying reaction in the crude market coming in. So now it's like, if this doesn't thrust back up through these little 1 minute highs on these candles, then the signal is sort of over and it could just go back and tank to the downside. Sometimes I'm early on these and then I get shaken out, and other times I'm too stubborn about not taking a small little piece off when I had a chance there, right? And the buying pressure didn't come in quite as hard as I hoped, but it still could, right? Because now if NQ starts to go, it actually could be a much bigger squeeze that comes out of it, because now they've just sort of created a whole nother amount of stops in there that could really fuel it with some intensity. But you're seeing a little break in the advanced declines, and whether or not this rotates or could become sort of a sell everything kind of day as well, I think you're going to get a move back up into these 15s. You see, it's an anxiety trade of, okay, are the shorts now getting a little bit anxious that they didn't just miss this opportunity right here? And they might be, but they might just totally reject these again below the pivot here. And the program cells can come right in and start sweeping. So I'm not going to be silly about it, but I still like the chances that we'll get a little like a real test of the pivot. Let's see if we can print the 89.25. Now that I'm being given a second chance on this, it's like I don't want to have it completely sweep back down to the downside, right? So as a long, there's also anxiety here, right? Fuel to fire. Come on. We'll see, Delph. Let's see. Sometimes it will reject exactly and perfectly. So be careful, you know, but just need a little bit of an uptick, right? Like, see if we can print, say, 500, 600 upticks. Okay, I'm a little nervous. I mean, my order's been in the queue for a while here, so I should be able to get it if it trades there. Boom, got one off. Okay, that's a nice feeling because now I can relax a little bit. And then, like I said, I want to try to make $1,000. So I'll just put it up here at 15.75. See where that comes in, right at where that moving average is. And especially right now, You want to see it get up through this pivot and accelerate. The fact that the NQ is pulling back slightly could be a tell, but if it also pulls back slightly and then goes hard, you should see it print to this moving average up here. But oftentimes when they reject the pivot in the NQ, they can sell it hard, and it could be a program seller that comes in, and you'll see some pretty heavy selling. So I'm not going to be, you know, the easy way to do this is now to have my stop below the low of this bar on the 15-minute, which comes in at 07.25, right? So this bar over here, the high was 07. See that? So resistance becomes support. So as long as that holds, you know, this thing has the opportunity here to now really expand to the upside, because you're getting into this pattern where they pulled back slightly into this candle. Buyers come in, they expand the candle upwards. If they don't, I don't want to be stupid about it. So if I'm protecting my profit, I can use the 7.25 level. Sometimes what I like to do is try to find something like this as a controlling bar. Let me blow this up. So where's the controlling bar here? This is the ultimate controlling bar on this one, right? And then this one's the next kind of controlling bar, I think, right? So you really don't want to see it violate the low of this bar, because if it does, you know, then they can easily target and sweep the stops right on through. So it becomes tricky right there, because it's also like, if I put my stop at 6.25, I could get stopped out, and then they could go on through all the way up to the open or whatever, right? Look at RTY, eyeing highs. I would guess that we're going to see RTY print that 3081 level. So I'm trying right now, I'm trying hard to decide, where do I want to stop out the last one? Because I want to try and survive any little shakeout here. But honestly, like, this now becomes a really good looking reversal signal, partly because it also happened slowly. So it gives some time for this to generate as a, you know, like Carter Worth likes to say, a bearish to bullish reversal. Not just this, you know, you can have the V bottoms, but you can also have these ones where when they develop like this and they have a nice smooth rounding bottom, the reason why sometimes those can develop into really nice uptrends is because you've given extra time in there for, you know, people to sort of be trapped on the short side as well, right? So like, now those people start to be the ones really panicking if it gets up through here and sustains this pivot. And so for the NQ to come back below it and then boom, reject it. Now if we see another big green bar right here in the NQ, then they've got buy side stops to target here, here, here. And next thing you know, we're trading up to the open, and we could be following the lead of the RTY and trading right up through the open and closing on the highs of the day on a Friday on a big August upside week where nobody expected that to happen in August. It could just be a beautiful trade, you know. to end your week on. Like, I don't know. That's not necessarily how it's going to go here. So I'm not going to be stupid about it. But this is it for me. This is my last trade. I'm going to put my stop in down here below this little level. I'll call it let's see, the low of this bar. I'm just going to say the low of that bar is 6.5. I'm just going to have my stop now at 5 3/4. And actually, yeah, I could do this as a one cancel other, right? So so what I do is I click the OCO button. I go there, and I go, let's say 06. And those should be on an OCO now, right? Did you see the way that OCO worked? When you click it, so it's a one cancels other. So when you click it, now if I put in a sell stop at 3.5, see how it's purple? Well, that's because that order is being held. It hasn't been submitted until I put the other one in on the ask side, or on the profit taking side, right? So when I click this, oh, I guess it rejected it because I'm already in the position or whatever. Limit order, then stop. Okay, that's what Neil's just corrected me. So you do the limit side, then you do the stop side. Right, so this OCO matches this OCO, and this one matches this one. And I think you can, like if I pull up, my orders here, I think there's my orders. And there's probably a column I can add to this. Yeah, so if I want to see, let's just add them all, and you could see price, trigger, time in force, status. Oops. Status and order ID. It's interesting that it doesn't necessarily tell me that's an OCO. Is that a setting I'm missing, Niels? I don't know. Oops. All right, so we're getting this confirmation now in the, oh, gotcha, okay. We're getting this confirmation now here in the NQ. It reclaimed that pivot, and now the buying, let the buying begin. I mean, we'll see, right? Crude is also currently testing 82, you know, above the open, a nice reversal. Remember when I talked about this 15-minute moving average on the reversal, that you could have tried buying it in here on the retest of that with the stop below the open? Okay, so now that's paying nicely. Of course, I didn't take that trade, but if crude keeps expanding to the upside, then we have to see, does the market care? Does it notice? Does it react? Nice. Awesome. I'd be, you know, honestly, like if I had someone that would push the buttons for me when I called out my own trades, and you know, and I've thought about that at times, like, is there a way for me to just pay someone to actually execute it for me when I'm with my mouse, with my hands not on the mouse? Probably do a lot better. Um, yeah, I know. I should exactly. Danny asked me, "Don't you ever tried automating this stuff?" I'm like, "Yeah, I have tried it. It was a long time ago, and now all this stuff is so much better. I should be doing it, and maybe I will one of these years." Or maybe one of you guys wants to help me try to do it, you know. Um, but with that all said, I'm going to go ahead and leave my screen on here with Niels's awesome trader platform. I'm just going to let this one play out, and then this is going to be it for me and for the live stream. And I'll still probably be around a little bit, but I'm going to take a break, get something to eat, probably do some climbing and hiking and stuff today. And yeah, you're welcome, guys. Thanks for listening. Hope you have a great day. Hopefully it helps. Reach out with anything if you ever want. I'm glad to always help or have just side conversations, chats, whatever with people. I love talking about this stuff, and I hope that comes through. And yeah, enjoy the beach, Niels. Have a pina colada or something for me, and we will see you guys next week. Have a great weekend, everybody. Cheers.